As of now, we all know that once price creates such a structure where it's making valid pullbacks to the upside and then retraces to take out the liquidity resting below this pullback lows and again reverses back to break past this high, then a break past this high is a confirmed valid break of structure. Alright, by the way, it doesn't matter how many lows it takes. We only need at least one to be taken out. In this case, I mean the recently formed one. Like the liquidity resting below the recently formed valid pullback. The keyword right here is valid. The keyword here is valid and liquidity. Inducement is not the pullback, it is the liquidity resting below this recently formed valid pullback. And the keyword again valid, so meaning if this pullback here is not valid, meaning it's just a random pullback, then it will not be a valid pullback. This low or the liquidity resting below that low, it will not be a valid inducement. And by the way, this recently formed valid pullback is identified on the impulsive move. So right here, after price has created that break of structure, the recently formed valid pullback was that one there. So this means the liquidity resting below that recently formed valid pullback, which is this one here. This here was the recently formed valid pullback, and this one here was the low. So that liquidity that is resting below this low, that's what we call the inducement. And right here, after price took out the inducement and also an additional liquidity resting below that low and reversed back breaking past this high, then this one here, as usual, it will be a valid break of structure. Then this says that we have formed a new trading range that ranges from this low and currently ending at this high. So the recently formed valid pullback, like we said, we mark it on the impulsive move. So the impulsive move is obviously the trading range, which ranges from that low and currently ending at this high. So where is the recently formed valid pullback in our trading range? Obviously, this one here is the recently formed valid pullback. This one right here. This one here is obviously the recently formed valid pullback. What if now price creates another pullback on top of it without taking out this low? It does something like this. It creates another pullback right there. In this case, then this one here will now be shifting right there because we said it is the liquidity resting below the recently formed valid pullback. The keyword here is recently, liquidity, and valid. So this one here is the recently formed valid pullback. It is the one that is formed recently. So, and our obviously our trading range high, it will be this one now. So not until this pullback here is taken out, not until like this low, not until price retraces and takes out this low, it doesn't matter if it takes additional lows below and then reverses back and breaks this structure, like breaks past this swing point, then this is then considered to be a valid break of structure. And then obviously we will be in a new trading range with this one here being the low and this one here being the high. And when I said that the inducement should be identified on the impulsive move or the trading range, I meant that sometimes price can create a pullback like this, and some people may end up marking this one here to be the recently formed valid pullback, meaning the liquidity resting below this low, it is the one that they mark as the inducement. So in this case, they will be wrong. This one here is not the inducement. In this case, this one here is just a pullback low on the corrective move because the impulsive move ranges from this low all the way to that high. This is just a corrective move. The inducement should be mapped on the impulsive move, meaning this one here, because this one here is the recently formed valid pullback low on that impulsive move. And the other scenario that people end up mapping the inducement wrongly is this one here. You can clearly see that the recently formed valid pullback low is this one here. But if I take the rectangle and I do something like this, you can clearly see that this pullback is engulfed inside this order flow. Like this one here is the major, meaning this one is just a minor that's engulfed, and this one here is the major. So meaning this one here is a minor pullback. So we can just put it in such a way that you can understand. So I can just say this one here is a minor recently formed valid pullback, and this one here is a major recently formed valid pullback. then we can now again say that this one here then is a minor inducement and this one here is a major inducement. So again the question arises, should we pick the minor inducement or should we pick the major inducement? In such a scenario, ignore this minor one and go with the major one, because the major one is the one that's valid. Alright, so now let's get practical by diving into the real chart. And to the real chart, we can clearly see that the recently formed valid pullback is taken out and the liquidity resting below that low is the one that is called the inducement, just like we defined it before. And right here, price continued even further, grabbing another liquidity right here, and again reversing, breaking past the swing point. And we usually say once you see such a pattern, this one here is a confirmed valid break of structure. This then explains that we are in a new trading range that ranges from this low and currently ending at that high. Like I said, the inducement or the recently formed valid pullback, we usually map it on the impulsive move. So considering our trading range, we say that the impulsive move is the trading range. So considering our trading range, which ranges from this low and currently ending at this high, where is the recently formed valid pullback? Alright, right here, this one here is our high. So where is the recently formed valid pullback? The recently formed valid pullback, is it this one or is it this one? Alright, like I said that when you see such a scenario where a pullback is engulfed inside another, in this scenario, we usually pick the major one because this one here is indeed a recently formed valid pullback, but so is this because this one here is engulfed. So we can call this a minor and call this a major. In this case, we usually go with the major and ignore the minor. So this explains why I will mark this one here as our inducement. And once price takes this recently formed valid pullback, once price takes this recently formed valid pullback and reversed back, breaking past the swing point, then this one here will be a confirmed valid break of structure. So let's see what price does. Let me run price and see what price eventually does. Right here, price is heading towards our inducement, and exactly right here our inducement is taken out. It doesn't matter how many lows price decides to take further, as long as the recently formed one, which is the inducement, the liquidity resting below the recently formed valid pullback, which is the inducement, is taken out and price reverses back, breaking past this high, then this one here is a confirmed valid break of structure. And right there, price made that break of structure to the upside, exactly right here. And I said it doesn't matter how many lows it takes further, as long as the inducement is taken out, then all we need is a break past this one here to confirm a valid break of structure. So that's there a valid break of structure, meaning now we are currently in a new trading range with the low being this one here. So that's the low. And yeah, so we continue mapping the structure. Since we have identified our trading range or our impulsive move, this means then we need to map the recently formed valid pullback. And where is the recently formed valid pullback? This one here is the recently formed valid pullback at the moment. So that's there the inducement. So let me continue mapping structure. So let me continue running price. And exactly right here, this one here was not a valid pullback. This one here was not a valid pullback, explaining the reason as to why I didn't mark that as the inducement. And right here, this here is taken out, and if price breaks past this high, then this one here is a confirmed valid break of structure. Right, and now here the opposite becomes, instead of price breaking past the high, price decides to break past the low right here. So this means that price is now not in an uptrend, but now in a downtrend. Right, so let me continue mapping price. And exactly right here, price has created a valid pullback, because now since we have shifted bias from being an uptrend to now being a downtrend, our impulsive move is this one here. So this one here is our impulsive move, or the trading range actually. Right, so let's see what price eventually does. So right here, when I zoom in so that I can identify the recently formed valid pullback, we can clearly see that the recently formed valid pullback is this one here. So let's see if price eventually breaks without taking out this inducement or taking out that recently formed valid pullback, which is the inducement. And exactly right here, price created another one. So meaning the recently formed valid pullback is that one. This one here is not a valid pullback. So that's there, the inducement, because that's the recently formed valid pullback. And the recently formed valid pullback, the liquidity resting above that, that's the inducement. This one here is not a valid pullback, so I will trash that. And right here, price is actually heading up, and once that liquidity that is resting above that pullback, or once that inducement is taken out, right here, exactly right here, you can clearly see price took out this inducement. And I said it doesn't matter then if price decides, let's say, to break past this inducement and goes up and takes out, I don't know how many pullbacks it decides to grab, or I mean how many pullback highs it decides to take out before actually coming up all the way, breaking past this point. This still counts to be a valid break of structure. So this means that we only need this recently formed valid pullback to be taken out, just like this. It doesn't matter, it can be a takeout by a wick or a candle close, it doesn't really matter. So once price breaks past this low, then this one here is a confirmed valid break of structure, and this recently formed valid pullback is the one that we call the inducement. And exactly right here, we can see that price breaked past this one here. Right, let's see. Yeah, eventually price breaks past this. Eventually price breaks past this low right here. So this one here is a valid break of structure. We say that a break of structure by a wick is considered valid if price breaks past the previous swing point closure right here. You can clearly see price breaked past the previous swing point closure by a candle close. So this confirms that part, or this confirms this one here to be a valid break of structure, meaning we have got a high right there. So right here, where is our inducement? Right here, this here is the recently formed valid pullback, and if price comes all the way to sweep this liquidity, or to just break past this, or to grab this liquidity that is resting above this high, which is the inducement, and then retraces back and breaks past this point, then this one here will be a confirmed valid break of structure. So right here, let's see what price does, or maybe if price creates another pullback, like something like this. If price creates another pullback right here without going up, taking this pullback, then our inducement will now be shifting from where it is to this recently formed valid pullback. So that's something also you need to note. So right here, let me run price and see what price eventually does. Right. And exactly right here, price has grabbed that liquidity, and so right now we are waiting for a break past this. If we get a break past this low, then this here is a confirmed valid break of structure. And exactly right here, we get a break here by a valid, like we get a break that's valid, and meaning now we are currently in a new impulse move or a new trading range, with this one here being the high of that trading range. So is this retracement like grabbed a recently formed valid pullback? So in this here is like, let me rewind price and see what price, if price created a valid pullback right here, is this a valid pullback, or is this one here a valid pullback? All of these are not valid pullbacks. Why? Because they are all inside a bars. So trash that. That's not a valid pullback. So let me run price and see what price does. All right, price took out these minor pullbacks. These are not valid pullbacks, and we say not until the valid pullback, the recently formed valid pullback, is taken, will we consider this one here to be a valid break of structure. So right here, let me continue mapping price, running price. And right here, price break without taking any minor pullback, and right now the recently formed valid pullback is this one right here, because, or let's see if price eventually creates another pullback. All right, price fails to create another pullback and it's currently going up. exactly right here. You can clearly see price went up and up, meaning now if price comes all the way breaking past this or just grabbing this liquidity that is resting above this recently formed valid pullback and reverses all the way to break past this low, then this one here is a confirmed valid break of structure. So right now I'm waiting for this recently formed valid pullback high to be taken out, or the liquidity resting above this recently formed valid pullback, which is called the inducement. I mean, once the inducement is grabbed, or once the inducement is, I don't know, taken out and price reverses back to break past this swing point, then this one here is a confirmed valid break of structure, and price would have formed another another impulse move or another trading range or a new trading range. So right now let me continue running price, and eventually right here we can clearly see that price has grabbed that liquidity that is resting above this high right here by these wicks. And once price has done that, if price now reverses and breaks past this, then this one is a confirmed valid break of structure. Right now it doesn't matter if price comes all the way to take out the liquidity resting above this high. As long as the recently formed valid pullback is taken, then whatever price does, we don't care about that until price breaks past this one, as long as this high is protected, this recent high or the high of our trading range. So let me continue running price. And exactly right here, you can clearly see price went forward, breaking the structure or breaking the swing point that we were anticipating the break from. Exactly right here. So this means that now we will be confirming that this one here is a valid break of structure. And we are currently in a new trading range, with this one here being the high of the range, this one here being the valid break of structure. I know you're wondering why I am considering this one, even though it's a break by a week, I am considering it valid. This is because, like I said before, that once price breaks past the, like you can see here is where price closed on the previous swing point or the swing point that we are currently breaking. You can clearly see this is where price closed, and price has closed past that. So this here was the swing point closure, and price has closed past that. Even if the lowest point price broke by a week, this is still considered to be a valid break of structure. All right, so let me continue running price. And exactly right here, this one here was the recently formed valid pullback. Right here, let me rewind so that you can actually see what I'm talking about. Right here, you can clearly see this one here is a valid pullback. That one there, that's a valid pullback. And so if price traces and takes out this or grabs the liquidity resting above this, because this one here is the inducement, and we say that we only need the inducement to be taken out. Whatever price does above that, how many highs it takes, how many whatever it takes, that doesn't matter, as long as the recently formed, which the recently formed liquidity, like I mean, as long as the recently formed valid pullback is taken out, or the liquidity or the inducement is taken out, and price comes and breaks past the, like this lowest point or this swing point, then this one here is a confirmed valid break of structure. So let's see what price eventually does right here. And exactly right here, after running price, you can see price grabbed this liquidity, swept this inducement of the recently formed valid pullback high. Obviously there is a liquidity resting above that, and the liquidity is what we call the inducement. And if price now breaks past this point, this one here, then this one here is a confirmed valid break of structure. So let's see what price does. Let's see if price breaks past this point, and eventually right there price breaks right there very perfectly. Price breaks past this point, with this one here being the swing point, this one here being the swing point. And now we are currently in a new trading range, with the high being this one here and the low currently where it is. So where is the recently formed valid pullback? This one here. If price breaks past this, then if price breaks past this one here, then reverses and breaks also past this low, then this one here will be a confirmed valid break of structure. So let's see what price does. All right, eventually price failed to break past that, and it created a new, all right, no, there is no any pullback that price created. So let's see. All right, so if price now breaks past this one, then this one here will be a valid break of structure. no, I mean a valid inducement if price breaks past this one here. So let's see if price breaks past that. Yeah, and eventually price breaks past that. So this one here is a confirmed inducement. So yeah, and exactly price created another one, another valid pullback, and we said we only pick the recently formed valid pullback because that's our inducement. So once price takes out this, then this one here is like once price takes out this and comes all the way again or reverses back and breaks past the swing point, then that's a confirmed. Exactly. So right here, once price has take out the inducement, this one here is a confirmed swing point, meaning that if price now comes and breaks past this swing point right after taking out the inducement, then this one here is a valid break of structure as long as this high is protected, like our trading range high is protected right there. So right now it doesn't matter how many pullbacks price or how many like highs price takes, as long as now the inducement is taken, because we need only the inducement to confirm this one here as a swing point. All right, so right now let me continue running price, and right now eventually price break past our high. So in this case now, since price has break past our trading range high, then this means that price has changed bias from being bearish to now bullish. So guys, I hope by now you have understand how to mark the inducement on a real chart. And so let me not make the video long. So if you made it this far, I know you have enjoyed the video, so drop a like and see you in the next part.